How to earn passive income with Bitcoin and other cryptocurrency. As with many other assets, buying and selling cryptocurrency can yield rewards, but you can also use it to generate passive income. Passive income is a way of making money from your assets without having to put in any effort on your behalf. Compounding interest, dividend reinvestment, and rental income on investment properties are all examples of the same concept. There are several ways to make money using cryptocurrency without doing any work. Using cryptocurrency as a source of passive income. However, the strategy you choose and the quantity of crypto you have at your disposal will affect your passive income returns. Because of the market's volatility, no crypto strategy can guarantee a profit. Even yet, those who have a significant quantity of cryptocurrency at their disposal have a number of options for generating returns. If you're looking for long-term gains, you can either hold on to your crypto for the time being and hope for the best, or you can sell some or all of your crypto holdings for a profit. Strategies for generating passive income from cryptocurrency. Cryptocurrency lending and borrowing are two of the most common ways to generate passive income. Aside from hosting a node, mining or staking Bitcoin, there are a number of more complex options. There are a variety of cryptocurrencies that can be used to generate a variety of passive income streams. Here are 10. 1. Affiliate programs. Cryptocurrency-related products and services are among the various types of businesses that might benefit from affiliate programs. For example, some exchanges have affiliate programs. How can I participate? Participate by registering, submitting an application, or sharing a promotional link. Promote a service or product to their social media or personal networks. Make money whenever someone does something, such as opening an account on a specific exchange. According to Coinbase, affiliates can earn a modest Bitcoin reward for signing up new users using their affiliate link at the time of publication. If you're looking to make money passively with cryptocurrency, one option to consider is affiliate marketing. Number 2. Digital asset accounts that pay interest. Digital asset accounts that pay interest. Depositing cryptocurrency in a savings account-like account is becoming more commonplace. Due to historically poor yields on standard cash savings accounts, this has become an appealing offering for investors. Open an account and deposit your crypto or stablecoin to get started. Lockup periods may be involved, in which users cannot access their funds for a predetermined length of time. In return for making a deposit, consumers are rewarded with cryptocurrency interest. USDC and DAI, two popular stablecoins, frequently have the highest interest rates. Some of the most popular providers of these accounts include BlockFi, Celsius and Vold. 3. Lending crypto to others. Investors can lend cryptocurrency in a variety of ways. For a charge, you can temporarily loan out your cryptocurrency to someone else. A person's earnings are determined by 3 factors. 1. How much crypto is being loaned out in total. 2. The length of the loan period. 3. The rate of interest. It is possible to make more money from borrowers' interest payments if interest rates are higher, loan terms are longer, and loans are larger. It is possible to make crypto passive income in a variety of ways, including by creating loans. In other cases, the terms are negotiated in advance by a third party. Lending on a margin. When a trader wants to use borrowed money to increase the size of their position, he or she can turn to margin lending. This gives traders the ability to increase the size of their positions in such assets while also paying back the loans. In this situation, the majority of the details are taken care of by crypto exchanges on your behalf. The only thing that users need to do is make their digital assets available. A single lending institution. This type of lending relies on a third-party lending infrastructure and set of terms. Interest rates and lock-in periods will be established in advance of the transaction. A deposit of cryptocurrency must be made to the lending platform before interest is earned. Direct lending without a central bank. Lending over the blockchain, often known as DeFi lending, is a method of borrowing money. Automated interest rates are used to connect lenders and borrowers without the need for intermediaries. Lending to others via the internet. Direct borrowing between individuals is made possible by peer-to-peer lending platforms. Users must first fund the lending platform's custodial wallet with their crypto assets before they can withdraw any funds. It is now up to them to decide how much money they are willing to lend at what interest rate. As a result, users have some say in how their crypto loans are processed. 4. Proof of stake staking, otherwise known as polonium-2 sulfide. There are a number of ways in which you might prove your stake in a project. polonium-2 sulfide, staking. Blockchain technology uses proof of stake as an alternative to Bitcoin's proof-of-work consensus technique. In POS networks, nodes stake enormous amounts of tokens in order to agree on which transactions are genuine. In place of mining, crypto staking takes its place. In POS, validators obtain fresh block rewards instead of miners, as in POW. It is not necessary for validators to have high-end computer hardware, but they must have a sufficient number of tokens to be able to add the following block. Staking on many networks requires an initial investment. Cryptocurrencies like Cosmos, Atom, Tezos, XTZ, and Cardano, ADA, are all readily available on major exchanges for investors to purchase and hold. ADA. 5. Not those clouds. Mining in the clouds. Cryptocurrency mining needs significant investment in computing hardware as well as the required technical expertise. Contracts for cloud mining are an option. Mining rigs can be rented from an established operation rather than being built from scratch. People can acquire cloud mining contracts for a fixed sum of money that entitle them to a fixed hash rate for a fixed period of time. The contract holder receives fresh coins in accordance to the contract's size. Scam alert. There are numerous cloud mining ripoffs out there. Those who are considering cloud mining should do their homework and verify that the firm selling the contract is real before signing on the dotted line. 6. Tokens that pay dividends. Tokenized stock is a cryptocurrency that is backed by a company's stockholders. Similar to the way stockholders receive dividends, these tokens offer dividend payouts from time to time. Quarterly dividend payments are the norm. 7. Farming for profit. The rise of decentralized exchanges, which rely on smart contracts and investor-provided liquidity, gave rise to the phrase, yield farming, in 2020 and 2021. Investors put their tokens into a liquidity pool, and unique type of smart contract, in order to get a return on their investment. Traders who use the liquidity pool pay a fee to the people who make it available. If you'd like to get into yield farming, you'll need to put in a lot of time and effort into it. However, it has the potential to be one of the most lucrative ways to generate cryptocurrency revenue in the long term. Some Ethereum, ETH, and a DeFi token like Uniswap, Uni, or PancakeSwap, Cake, are perhaps a stablecoin like Tether, USDT, are commonly required in yield farming, USDT. 8. Lightning node. As a Layer 2 scaling solution for Bitcoin, the Lightning Network enables for lightning-fast, inexpensive micropayments on a large scale. For example, El Salvador, a country that has legalized Bitcoin, uses Lightning for its Bitcoin transactions. These transactions are made possible via Lightning nodes. Each transaction charge that passes through a node is split between the node's operators, who get a small percentage of the fee. Having a Lightning node is a low-paying endeavor. A node operator may only make a few dollars a month in Bitcoin since the fees are so low. However, some users claim to have made as much as $25 in a single month, depending on the value of BTC in relation to the local fiat currency of the user. In terms of Bitcoin passive revenue, this strategy isn't very effective. There are many people who participate because they believe it is important for people to trade using Bitcoins. This means that node operators will likely see a surge in income as Lightning expands and more transactions are routed via it. 9. Master nodes. In total, there are 9 master nodes. Dash, for example, uses a special form of node known as a master node in its blockchain network. Those who manage these nodes stand to profit greatly. The average person will not be able to take advantage of this, as maintaining a master node often necessitates a large amount of money. Each time a new block is mined, masternodes receive a piece of the reward. 10. Someone say airdrops and forks. When an existing chain of coins splits off into a new branch, this is known as a fork. In the case of airdrops, new currencies are created and dropped on users as a reward for one or more reasons. How to earn passive income with Bitcoin and cryptocurrency can be ideal for many people once you know what you're doing. Make sure you seek advice and guidance from a qualified financial advisor to understand what's best for your portfolio. Subscribe to our channel so we can help you with more information on passive income, side hustles, and more investing ideas.